Hi everybody, Thomas at Rebel Income. Today I'm going to put my focus on one of the most recognizable pharmaceutical companies in the United States, Bristol-Myers Squibb. They're a US-based company with a global reach. They've been around for more than 135 years. In recent years, they've achieved growth by focusing their product pipeline on 3 drugs that accounted for 61% of sales in the last year. Their stock has faced some tribulation over the last year, falling from a peak in December 2023 at around $81 to a recent low at around $48 per share. Stock's got a little bit of momentum on the bullish side picking up in the last month, which means the stock could be sitting in a good position to reverse that long-term downward trend. The stock also pays a pretty nice dividend at its current price, with a value proposition that is interesting enough to increase the intrigue. Let's take a deeper look under the stock's hood to see if there's enough strength in the company's business to warrant taking the stock seriously. Before we dive into the details, I want to take just a minute to invite you to check out my Rebel Income Patreon page. I publish daily exclusive access content on this page, from stock reports detailing my analysis and search of the trades that I publish in my trade alerts, to lists of underpriced dividend-paying stocks, and even weekly recordings discussing current open positions as well as current market conditions. You'll find the link in the description area for this video. Go ahead and take a look. I know you'll be able to find something you'll be able to use in your own trades. From a fundamental standpoint, Bristol-Myers Squibb has a lot going for it. Free cash flow, for example, over the last year has increased steadily from a little over $11 billion 12 months ago to its current level at around $12.6 billion. That's an increase of $1.6 billion over that time period and translates to a useful free cash flow yield of 12.21%. In addition, the company's balance sheet has gotten quite a bit stronger, with cash increasing from a little under $9.3 billion a year ago to its current level, as of the most recent quarter, at just under $12.3 billion. Long-term debt is a little bit high, but that's not entirely unusual for pharmaceutical companies. Bristol-Myers Squibb, in this case, currently has about $36.6 billion in long-term debt, and that does mark an increase of about $1.6 billion from its level a year ago at just a little bit over $35 billion. The company's increasing free cash flow and liquidity are both pretty good indicators that servicing their debt isn't a problem. Also supporting that idea is the company's operating profile, which I like to measure using net income as well as revenues. Over the last 12 months, net income was about 17.83% of revenues, which is a very healthy level for the trailing 12-month period. This number did decline a little bit from 17.83% to 15.35% in the most recent quarter. The decline is of note and shouldn't be dismissed. However, the 15.35% that it came out to for the quarter is still a very healthy level and confirms that the company is still in financially very good shape. With a generally solid fundamental profile in hand, let's take a look at the company's dividend yield, their payout, and their dividend payout history. At the stock's current price, Bristol-Myers Squibb pays a useful dividend yield of right around 4.5% right now. That's attractive and that's very useful for investors who are interested in passive income. The fundamental strengths that we've just outlined demonstrate that the dividend is pretty safe and is not something to worry about needing to be cut or reduced at any point in the near future. The company also has a solid history of dividend increases going for them, which we can see at the beginning of each of the past 5 years, having seen management has instituted useful increases in their dividend payout. The total dividend payout is $2.40. That's the number on the right. The number that I have on the left is $7.50. That's the total amount of earnings per share the company generated over the last 12 months. I like to use these numbers together to calculate what the company's dividend payout ratio is. The math is pretty straightforward. We simply divide $2.40 into $7.50, and what you get is a dividend payout ratio of just a little bit over 33%. In very general terms, a sustainable dividend payout ratio is usually about 50% of the company's earnings per share over the last 12 months. So this is a relatively conservative level for Bristol-Myers Squibb and reinforces the idea that the dividend is not only interesting from a yield standpoint, but is also a high-quality, sustainable dividend. With all that in mind, let's take a look at the stock's current price and see what price action can tell us about what kind of opportunity there may be if you're interested in buying this stock. Bristol-Myers' downward trend is very clear, shown by my 200-day moving average, which is clearly sloping down and which mirrors the price action of the stock over the past year, at least until about November of last year. At that point, the stock did hit a bottom in the neighborhood of $48 per share. It revisited that bottom again at the beginning of February, but has started to pick up some positive momentum from that point and has been rising pretty significant fashion. At the same time, the 20-day moving average, which I use as an indicator of the stock's short-term trend, has also reversed direction. It had been going down, it started to flatten out, and more recently has begun to follow the stock's overall bullish momentum to begin moving higher. And especially in the last 3 days, the stock has picked up a lot of bullish momentum, driving from about $51 to start the week to close, as of today, a little bit above $53 per share. We also have a useful break above pivot high resistance from December of last year, a little bit above $52. Now, these aren't guaranteed indicators that the stock's trend is going to reverse, but these are very solid signs that a bullish reversal could be coming. In fact, this pattern combination of a declining 200-day moving average with a recently increasing 20-day moving average with positive bullish momentum in price action is a good example of a pattern that I like to call a bullish level 1 pattern, which is, generally speaking, one of the better early indications that a bullish long-term trend reversal is in the offing. That's useful for short-term traders who may be interested in a momentum kind of a play. It can also provide a little bit of confirmation for a value hunter who may be looking for an opportunity to buy a good company at a nice price. So with that in mind, let's go ahead and take a look at Bristol-Myers' overall value proposition. With the stock just a little bit above $53 per share right now, it has a little bit under 10% of upside to the fair value target that my value analysis has given me at about $58.53 per share. A very compelling discount price would be if the stock were to reverse and drop a little bit further down to about $47 per share, but that's also about $6 away from the stock's current price and would not necessarily be required in order to consider taking advantage of the overall setup this is offering. When you consider the almost 10% upside in the value proposition plus the 4.5% dividend offered at the stock's current price, you have a total long-term opportunity over the next year that could be in excess of about 14.5%, which may be enough for a value investor to decide that Bristol-Myers is a good bargain. Thanks everybody, I hope you found this to be useful. If you like my content, please go ahead and give me a like below. You can also subscribe to my channel by clicking on the link shown right here. You can also learn more about my Rebel Income investing system by clicking on this video right here. Thanks again, I'm Thomas. Talk to you again soon.